Today on the Roxom Report London, Bitcoin touches 110,000. Analysts are mixed about where it could go next. UK pensions are showing a growing interest in Bitcoin. We'll take a look at how the euro might be outperforming Bitcoin. And Elon Musk could be scooping up more Bitcoin in secrets. All that, and we're going to talk with CEO of Jacobi Asset Management, Peter Lane, plus Susie Violet Ward from Bitcoin Policy UK will join us a bit later to discuss today's top stories. All that coming up right now on the Roxom Report London. Hello and welcome to the Roxom Report. I'm your host, Ione Butler, coming to you live from London every weekday to give you our takes on the latest and greatest Bitcoin news. Joining us today is Peter Lane, co-founder and CEO of Jacobi Asset Management, a leading innovator in digital asset investment solutions. With almost 17 years of experience in the wealth management industry, Peter has held leadership roles across asset management and advisory after starting working in the City of London the very day the Lehman Brothers collapsed in 2008. Prior to co-founding Jacobi, Peter advised high net worth investors on how to tax efficiently grow their long-term wealth. Now at the helm of Jacobi, Peter is helping shape the future of digital finance. And we're excited to have him with us to share his insights on the rapidly evolving world of Bitcoin investments and ETFs. Peter, how are you today? Thank you for joining us.
Thank you very much for having me, Ione. I'm great. I'm delighted to be here. It's nice to be into the air-conditioned room instead of the, yes, the blistering heat.
After your 45-minute walk to the studio today, which I was very impressed by.
Got my steps in already, right?
Yes. First of all, you started work in the City of London the day of the... How was that? What a nightmare.
It was bizarre, actually. So it was my first proper job outside of university, and I just started working in the city, and I didn't even really know what on earth was going on.
Yeah.
And so when you start, the first day you start like at 10 o'clock because your manager's got time to get all this stuff together.
Yeah.
And so the company we worked for, the first thing you ever did in the morning was a big business sales meeting. And so my first one was the following day.
Okay.
So it came out later in the day that Lehman had gone bust. So my first ever morning huddle was, don't worry, we're not going to shut down.
Okay.
And I was like, right.
I was going to say, did you get fired like
career.
2 days later? Or
no,
like
so we basically, when you're in wealth management, it's quite good because
everybody's panicking then.
If stuff's going well, they want to talk to you. If stuff's going badly, they want to talk to you.
Yeah.
So it kind of worked in fairly well. And the good thing for me is when I first started, relatively, it was really, really hard. But I didn't realise that because it was just it's my first week, first day. So whatever was hard just became normal.
Yeah.
So when the markets turned and the world picked up again, well, it was relatively easy. Mm-hmm. So I really loved that environment. Actually, we worked in a proper old school boiler room environment.
Yeah.
You got a bunch of young competitive people. You were on the phones all day trying to book people in, and then I just loved meeting new people.
Yeah.
Helping them try and work out what they're going to do with their life and what financial planning they need around that to help them give them what they want.
Yeah.
But it was really brutal. You were on the phones, you were cold calling, you weren't allowed to do anything else between sort of 10 and 1. If you didn't make enough appointments or didn't book enough people in, you weren't allowed to go for lunch.
Oh, Jesus.
So it's a proper old school boiler room strategy. And nobody, you didn't get a salary.
I was going to say, we're just commission based, which I find incredibly, it's great because when on the highs, but then the stress of I might not make anything this week. How did you manage that stress?
So I think it's very helpful if you start without any responsibilities in life.
Yeah.
So where I just finished uni, I was still living at my mum and dad's house. And fortunately for me, I took to it like a duck to water. Turns out I like calling people up and talking to anybody.
Yeah.
So I got on really well, actually. The first 3 months, you got 1,500 quid a month to make sure you could get there and back. But then after that, you're on your own.
Yeah.
And so that really meant you sink or swim.
Yeah.
And the people that sink leave because you can't afford to live. But the people that learn to swim, you become really independent for the rest of your life. And I don't think I'd be able to have started other companies without that mentality.
Right.
And there was at one point 100 of us. And so the people that have come out of that and built other businesses is amazing. I'd love that there'd be some stats on the success and the value that's been created from people that came out of that environment, purely because if you didn't do well, if you weren't relentlessly disciplined at what you were doing, you made no money and you left.
Yeah.
And it was an amazing environment. It was. I think I probably caught the back end of the good old days in the city, whereby you could do a good job for people, you get paid, and it didn't matter how old you were. If you were good enough, you would get investments. And so if you could honestly help people, and it was all regulated stuff, so it wasn't as if it was, trying to sell them something that's not right for them. But then after a few years, the way you get paid on commission terms changed.
Okay.
So then the models all changed. So it didn't really exist anymore. So nowadays it's all like more transparent fee-driven stuff for your time, instead of you get somebody invested into, say, a particular pension provider, and that pension provider dictates how much you get paid.
Interesting.
So now it's much more transparent. It's a different world. But I think I caught the back end of the good old days.
Yeah.
And it was brilliant.
I bet.
Yeah.
So what was your journey with Bitcoin and to get to where you are today with the company now?
So this was always put on my lap, to be honest. There was a client of mine so I met this guy because there was always this lady stood outside my office smoking with a little sausage dog, right? And she and I became friends. And then there was a pub 2 doors down, so we spent quite a bit of time together. And she said to me, I need to set up this company pension scheme. Is there anything that you know about that? I was like, of course, we could help with that. So I set up this corporate benefits package for this fintech company. So by default, all of them became my client.
Perfect.
And one of them was my co-founder of Jacoby. And the lady that introduced us, she said this would never have happened without the dog. And the dog's called Jacoby. So that's how Jacoby is quite literally named after a sausage dog. And so she said it would never have happened without Jacoby. So we were like, oh, okay, cool, we'll call it Jacoby. So he was chief commercial officer of a fintech company, but also had like a crypto brokerage that he built himself on the side. And we got on great, and some of the stuff that I helped him with, he was obviously very happy with. And he said, do you want to help start a crypto fund? And I was like, okay, sounds cool, let's give it a go. And this was back end of 2020.
Okay.
So I didn't think we quite realised where it was going to lead to.
Yeah.
So first working day of 2021, we got on a call with a friend of mine who knows a lot more about fund structuring than we did. He then put us in touch with a guy who was a fund structuring guru in Guernsey, in the Channel Islands. And then we sort of pitched the idea to this guy. And at the time, there were no Bitcoin ETFs in the world.
Wow.
And then he said, okay, let's give it a go. And
Wow.
Months and months later, the regulator finally approved it. Usually, you
And this is a Guernsey regulator,
so the Guernsey
right? Yeah.
regulator is it's a massive home for investment administration. It's a massive place for hedge fund administration, property fund administration. So it's what they do.
So random for such a tiny little.
Yeah, well, them and Jersey and Guernsey are similar. And the Isle of Man's similar too. The Isle of Man is more an insurance jurisdiction. But these are the sort of hubs where innovation happens, and then it grows out, then it becomes more global. So the guy said, well, no one's ever done it, but let's give it a go. And usually in these jurisdictions, you could get a fund approved fairly quickly, like 6 to 8 weeks sometimes. It took us 9 months.
Wow.
So it was way much more drawn out than usually you would have it because of the Bitcoin element.
Yeah.
And then once you get a fund approved, usually you would have it approved and listed in the same country. Like, for instance, when the American ETFs were approved, given the SEC approves both the funds and the listing venue, day one, bang, they're out.
Okay.
So we couldn't do that. So we then had to go and find a suitable listing venue to go and put it. So once we'd had the fund approved, we'd love to have done it in the UK, but that market was not really looking for crypto at the time. But the Dutch are pretty cool people, open to most things. So we went and spoke to the Dutch regulator, and they kind of welcomed us in with open arms, to be honest. And so I love going back to Amsterdam. The day we listed it, we went to Amsterdam. We stood outside the stock exchange because they've got the big bull, and we were ringing our own bell.
I love it.
So that was good fun. But it's been a long, drawn-out process, and it's quite hard to get. When you start to do something when none of them exist in the world, where does it start?
When you by the time you got to that stage where it had been listed, how many other ETF funds? How many had come about in that time? Or are you literally
Not many
the first?
still. So
okay.
In Europe, there were crypto exchange traded notes, which is a similar instrument, but it's a debt structure. So an ETF is a fund structure. So if you invested in my ETF, you would own shares in the company, and the company owns the Bitcoin. If it was one of the exchange traded notes, which is a debt instrument, you don't own anything. They owe you.
Okay.
So let's say, for instance, you've got 10 grand either in your house, it's yours, or I owe you 10 grand. Like, what would you prefer?
The house,
Clearly,
money,
your money. So the rules in the European ETF market aren't very accessible for creating single asset products, nor Bitcoin ones. So we had to think outside the box of how do you actually create this and then get it listed inside the EU. And there was quite a big gap between us doing this because when we were probably about to be ready to list, FTX crashed. So that sort of pulled the plug on everything for a year. And then when the Americans started looking like they were going to approve Bitcoin ETFs, we thought, right, let's put our foot down. So we had it listed in August 2023 because we knew the Americans were going to be approved at some point. We didn't know quite when, but we thought if we can get it out there before the Americans do, at least, whatever happens, we can always say we got out before America. But the first one in the world was in Canada.
Okay, I did not know
so
that.
the Canadians put a few out there. They were the first. Then some was in Brazil. There's now some in Australia. There's obviously some in Hong Kong now. But the real game-changing point was when the SEC approved the American one. So BlackRock doing it, that was a signal that there's no going backwards now. So if BlackRock are putting their name on it, you know it's mainstream.
Yeah.
And so I've not really heard many people bring up the old argument that it's a Ponzi scheme anymore.
Good.
Because if BlackRock are doing it, Fidelity are doing it, Invesco are doing it, all the big guys are doing it. It's here to stay.
Yeah,
big time.
So how does it work because of the ban for UK residents? Who are your clients? Are they people in Europe? Can you only work with professional investors? Like, how do you?
Yeah, so until recently, we were banned from selling to retail full stop too. So we recently, won our argument that we should be able to sell to retail, because it's crazy that a retail investor in, let's just say the Netherlands, could buy Bitcoin. So what is not appropriate about them buying a Bitcoin ETF? It's insane.
Right.
So the Guernsey regulator, they listened to us, they had a meeting about it, and they thought, okay, fine, it's now a mainstream asset. The American government are talking about having a load of it themselves, the American administration, the American asset managers are all doing it. So it's a mainstream asset.
We should allow a person to be able to,
Or at least allow that person to be dictated by the regulator they live within. So for instance, if someone in the Netherlands is allowed to buy it, according to their regulator, who is the regulator to say, well, not our one? So they changed their mind, which is great for us. And then in the same week as we announced this, the FCA revealed their consultation to remove the bans on crypto exchange traded notes, which they banned back in 2021. So there's all signals from all sorts of sides that regulations in this country are moving forwards. So at the minute, international or non-UK investors can buy our one on exchange as retail investors, but it's pretty much in professional investors. I don't think institutions in the European market really are buying Bitcoin yet.
Okay.
And when they do, if you're an institutional investor, it's very easy to just buy the Americans. So you would buy IBIT. If you've got BlackRock behind it, some of the investors I talk to, they would have no rationale other than it's BlackRock to buy it.
Yeah.
So even if they might not be the cheapest, they might not be, the most suitable. It's just so safe. Nobody ever got fired for buying a BlackRock ETF.
Yeah.
And so it's such a safe product that that's why it's cleaned up.
Okay.
So we sell to institutional investors sometimes, professional investors. Me, I'm an investor in our ETF. But now the UK seems to be opening up to retail. Hopefully we can make sure we're included in that unbanning. And then so we would be open to retail UK investors.
When do you think that might come into play? Like, how do you have like a rough a timeline?
Yeah, I kind of know. I mean, we've been speaking to the regulator about what it means for an ETF, because there's different rule sets. So an exchange traded note is guided by a certain set of rules. An exchange traded fund is under a different set of rules. So them unbanning a crypto ETN doesn't necessarily mean that ETFs will be available to investors, which it should be. If they're saying that Bitcoin is now okay to be invested in some form, well, that should be it. Bitcoin should be fine in any shape or form. So investors should have freedom of choice to say, well, I want to use an ETF, or I want to buy spot Bitcoin, or I want to use an ETN. It shouldn't be up to the FCA to dictate what product you use. So I would suspect, given that the consultation was a 4-week period, they will then go and look at the consultation answers. They will then formulate their plan as to what's best to do for the consumers. So I would imagine end of Q3, early Q4, there will be an unbanning of crypto products, whether that's all crypto products or just the ETNs. I'm not sure. We know that's still to be found out, but it will be this year, I would imagine.
What do you make of, because there's a lot of talk about there's Bitcoin and then other cryptocurrency, and there's a distinction between the two. What do you make of like unbanning everything versus just unbanning Bitcoin?
It's a wild move to unban everything, because you absolutely cannot categorize crypto and Bitcoin as the same thing.
Right.
Fartcoin is not Bitcoin.
It's so crazy.
And so there needs to be, in Dubai, for instance, their regulator's got a predefined list of things they're okay with.
Yeah.
And so if you wanted to go and list a fund there, they say, well, these are the 5 we're happy with at the minute, crack on, and they'll work on other things and they'll add to that list as it grows. I personally am a Bitcoin only guy. So I think for long-term wealth generation, Bitcoin is the only thing I would advise. So back in my wealth management days, I would only advise somebody to do something if I would have done it with my wife's money or my parents' money. And if they said to me, what should I buy? I would say Bitcoin. If you want to trade something that's really, really volatile, then maybe there's other cryptos you could win on, but you're probably going to lose on them. But if you want long-term wealth creation, and if you said to me what's going to be around in 10, 15, 20 years, I imagine there'll be some other cryptocurrencies that will, you know, overtake Solana or overtake Ethereum. But I've got no idea what they are. But Bitcoin will definitely be here. So I liken it to the golden tech stocks. So in 10 years' time, there will be some amazing tech stocks, but you can't tell me right now what they're going to be.
Yeah.
But you know gold's going to be around. So I think it's long-term store of value creation, gold and Bitcoin, you know, very similar. The other stuff, tech stocks, some will overtake others, but you don't know right now which is going to be the best. But I think Bitcoin will eventually, you know, outlive all of us, but I doubt some of the other stuff will.
Yeah, agreed. When you were working in the city, do you notice when the conversation had started happening around Bitcoin, or was it when it was the woman outside having the cigarette, and but when you kind of connected with your business partner, like when did you kind of start hearing about it?
So 2017, like you were saying earlier, 2017, the bull market happened and everything went crazy.
Yeah, yeah.
And there was a guy in my office that was obsessed. And we basically did no work other than watching the crypto market. And we were buying stuff I didn't even know what it was.
Yeah.
And so you would say to this guy, like, what about this one? And he said, oh, yeah, that's a good one. But I said, what does it do? He's like, I don't know. And so that was the issue. People were just buying any stuff.
Yeah.
It was gambling.
Yeah.
That is gambling. For me, if you want to build long-term wealth, gambling isn't really the way to do it. Investing in stuff that's going to be here for a long time is. And so I kind of dabbled at that point, but then I wasn't really that interested because it was, you know, just wild. And then when this sort of got put on my lap a little bit, then I really went down the Bitcoin rabbit hole. And I think once you go down the Bitcoin rabbit hole, it's very difficult to come out. And I don't feel like it's the same when you go down the other cryptocurrency rabbit holes.
Right.
Because, you know, I'm sure there's some great use cases, but I just can't see anything other than if someone said to me, if I want to invest in something and I want it back in 10 years, I wouldn't say anything other than Bitcoin.
Yeah.
So recently I pivoted our business to a Bitcoin only asset manager.
Okay, so before you.
Yeah, so we've got our Bitcoin ETF.
Yeah.
We've looked at and we've had approved by our regulator other crypto ETFs, but I've not listed them. I'm purely based on the fact that I probably wouldn't want to buy it myself. So I feel disingenuous putting something out there to people say you should buy this when I personally wouldn't do it.
Yeah.
So I thought Bitcoin is, you know, where I believe fully in. My background in wealth management leads me to try and target long-term wealth creation, and I think Bitcoin's the best thing I know for that.
Yeah.
And so I thought, well, I'm just going to go Bitcoin only. So other Bitcoin products that are good for investors in a range of different environments. So for instance, if you wanted to own Bitcoin as well as other stuff, well, what's your allocation model?
Yeah, what do you think that should be?
It depends on who you are, right?
Yeah, yeah.
So I'm all in.
Yeah.
But if you don't understand it like some people do and you're not as bothered about it, then maybe a 5 or 10%. But what the problem then becomes is Bitcoin grows at such a faster rate than everything else. Let's say you've got £100,000, you add 90,000 of other stuff, like S&P 500 for instance, and 10,000 of Bitcoin. If the S&P grows at 12%, but your Bitcoin grows at 60%, well, now that's significantly more than 10%. So nobody goes about rebalancing it themselves. So you're now out of kilter for your risk profile. So what I think will end up being the case is there'll be model portfolios with allocations to Bitcoin. So somebody who doesn't really want to take all the time to make sure their allocation's correctly proportioned, they'll just say, okay, well, I'm happy with a 15% allocation to Bitcoin, so I'll pick that one. And I won't have to worry about it ever again because somebody's going to manage and rebalance it for me. So that will become normal, and multi-asset portfolio managers will start to have to allocate to Bitcoin if they want to genuinely be a multi-asset portfolio. So I think that will be the future. And I think in 5 or 10 years' time, maybe 10, it won't even be that exotic or exciting anymore because it will just be everywhere.
Yeah.
And it will just be a normal part of everyday financial planning in all its forms. So it'll be weaved into mortgages, there'll be loans on the back of it, there'll be pensions that cover it, and I just think it'll eventually weave its way into every aspect of the financial world.
It's exciting. One of the questions was going to be, what do you see the future? But you've kind of summed it up quite nicely there.
Well, I think it will just become normal.
Yeah.
It will just be a normal part. And I think once the stigma goes that it's a Ponzi scheme or people don't understand it, they don't know what Bitcoin mining is, people will start to gradually learn the fundamentals that you need to know about. So I will never be a cryptographer and I will never be a computer scientist, but I fully understand the supply and demand element of it, and I fully appreciate that currency debasement is a problem and Bitcoin is a solution to that problem. So you kind of need to understand the things you're able to understand, and there's enough of them to make a compelling argument for it to be an investable asset.
Agreed. Yeah.
So I think it will eventually just be absolutely everywhere.
Yeah.
We're already starting to see people use it as collateral for loans, mortgages, and I think collateral is a really interesting point because if you, let's say for instance, I couldn't pay my mortgage and my house got repossessed, well, the bank would have to then go and sell my house probably for less than it's worth. It would take them 6 months, but Bitcoin I could sell like that at market price, 24/7, no problem. So I think as a collateral agent, it's a phenomenally effective tool.
Yeah.
So I think that it'll end up being like that.
I kind of wanted to touch on that. We've got some articles to get through, which I was going to bring it up, but I feel it's really unfortunate for Brits to be in this position where they're kind of being kept out of this space. It feels really unfair where, you've got all these other countries and people buying Bitcoin and the Brits are kind of being held back because of regulatory changes. And when you talk about this, the future, there is so much potential for it. And a lot of people, English people, don't really have access to it yet. It seems not right.
Yeah. So this is such a true thing. So I spoke to a load of multi-asset managers and I said, when are you going to adopt Bitcoin? And they said there's no demand. And I thought, well, that's crazy. There is a massive demand for Bitcoin. But the issue that traditional finance has got is that retail investors have been banned from buying it. So they can't demand it from their advisor.
Yeah.
Therefore, the advisor can't demand it from the fund manager. So they said there's no demand. So what's their incentive to bother trying?
Right.
So that's one of the issues, that the strangulation of demand is from the regulatory ban. So once that's lifted, I think that will really supercharge other asset managers to start to have to think about it. Because if let's say for instance, I put out a model portfolio with an allocation to Bitcoin in it, well, I'm going to beat somebody else. So if I start to beat another asset manager, well, they're going to be like, how can we keep up with these people because we're losing our clients?
Right.
So that's the issue that we'll see. And eventually they'll all have to have an allocation because otherwise they're going to get beat by their competitor. And what happens in a free market, people leave and they'll go to the guy that's outperforming.
Yeah.
So that'll eventually be the case. And I think it will take a few years for that to weave its way into the UK financial services, because once the Bitcoin, let's say the Bitcoin ETNs will be available, whether our ETF will be at the same time or not, I'm not sure. But that would only be allowed for people that either self-invest or if you use an IFA, an independent financial advisor, who's willing to take on Bitcoin. So a lot of them won't be because they don't understand it yet. Most financial advisors in this country, they work for big networks of wealth managers. And they generally, like St. James's Place, for instance, they only invest their clients' money in their own products. So until they create their own Bitcoin product, there'll be no St. James's Place advisor advising any of their clients to buy a Bitcoin product. So it's going to take quite a while for it to weave its way into a full regulated financial services market. But the first step obviously is meaning that there's the bans lifted. Yeah. People can now start demanding it from their advisor. The advisors will then demand it from the fund managers, and the fund managers that do it will start to outperform. So they'll start to gain traction, and their competitors will start to have to do something about it. But when that happens, I'm not sure. Yeah. But at least it's a start. Hopefully, that'll be at the end of this year.
Watch this space.
Indeed.
Well, thank you. We're going to cut to a quick break, and we'll be back with some news, and we'll bring out Susie Violet Ward too. We'll be back right after a quick break.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back, everyone. Let's dive in with the biggest stories making news. The top story today, this is Top of the Block.
Okay.
Bitcoin is back in the headlines today after breaking $110,000 just a few hours ago. Right now, it's hovering at around 109,000, I think. But the fact is, we're nearing record numbers, and we'll keep you updated as we see where things go during the show. The rally began early Wednesday after Bitcoin briefly dipped to around $105,200. It gained momentum alongside two key developments: a spike in money supply in the Eurozone and signs of weakness in the US job market. In April, the Eurozone's broad money supply, also known as M2, hit a record high, growing by 2.7% year over year. That suggests central banks in Europe are still pumping money into the economy. Meanwhile, in the US, private employers cut 33,000 jobs in June, adding to fears of an economic slowdown. But despite the price surge, professional traders aren't exactly jumping in. Futures data shows that optimism is still limited. The so-called futures premium remains below the 5% mark that usually signals bullish sentiment. That's kept some investors cautious, even as prices climb. Some of that caution may come from wider economic risks. The global trade war is heating up again. President Trump has threatened to raise tariffs on Japanese goods to over 30% unless a deal is reached by July 9th. In response, European officials are urging a tougher approach in trade talks with Washington, but internal disagreements remain. Options markets also tell a story of hesitation. A key gauge known as the delta skew sits at 0%, meaning traders see equal chances for the price to move up or down. That's a big shift from the more bearish mood just 2 weeks ago. So while Bitcoin's price is rising, many pro traders are holding off. For now, the rally seems driven more by macroeconomic shifts than real momentum in the market. Okay, Susie. Yeah. Price of Bitcoin's at an all-time high, and yet professional investors seem cautious. Why do you think that is? Do you think that's...
I think there's a big sell-off that hits around the 100k mark, and I think those are going to get exhausted at some point. So I think that is why that we haven't seen the blow-off top. When it comes, like Coinbase have signalled that ETF inflows will increase when financial advisors are able to. You were discussing that with Peter. That's a big problem. So once professionals can actually start accessing it properly, and that taboo has been lifted, I think that they need access to the best performing asset of the decade, don't they? Let's face it.
Yeah.
So I think OTC desks are running out of Bitcoin. The balances are at an all-time low in the past 10 years, and I think there's a lot of money out there. Everything's lining up for a big blow off top. I just think that it's just
the calm before the storm, maybe.
Absolutely. We talked about seasonality last week. June is historically not a very good month. July is one of the best performing
months. That is exactly what you said. Yeah.
So I think things will shift.
Peter, have you noticed this in your business? People are less jumping on board now?
Yeah, I think it all depends on what Donald Trump may tweet every now and then. And I think, anything can happen.
Yeah.
I think what the world probably wants to see before they dive in is what's America going to do with the big, beautiful bill? Are they going to then pump a load of money into the system? Are they going to raise the debt ceiling? Another $4 trillion is an awful lot of money to raise the debt ceiling by. And I think until people know what's going to happen with that, until they know what's going to happen in Israel, what they know is going to happen in Iran, people aren't diving into anything just yet. And I think there's an awful lot of positive signals for Bitcoin, but I think the trigger isn't quite being pulled yet. I think there's a few ducks to be put in the row. And then I think the second half of this year,
it's going to be explosive.
I think so, yeah.
Yeah. Do you find that when Bitcoin is just going through the roof, everybody is knocking at your door to kind of get involved, or is it or is it the other way around? Are there any patterns with kind of?
I think it's seasonality.
Yeah.
I think what's going on at any point in time, people knock on your door about. So I get a lot of knocks on the door about Bitcoin treasury companies at the minute. And so that's obviously a really, really growing trend. And I think that's going to carry on for, not just a few months, but a few decades, I imagine.
So investors asking to invest in Bitcoin
treasury. So I get asked probably every 2 weeks if I want to help out a new Bitcoin treasury company, or do I know anyone that could? And so that, I think, is going to be where most of the Bitcoin's going to be bought by. And so those guys are happy to buy Bitcoin. So even though there's macroeconomic problems going on, the treasury companies buying Bitcoin, they don't care about macroeconomic problems because they're Bitcoin through and through. So I think that is eventually going to suck out all of the people that are willing to sell at this price, like Susie mentioned, and then we'll go into price discovery. And then once you see, treasury companies getting institutional adoption, I think that's going to be the game-changing point.
I think 40% of all Bitcoin being bought at the moment is by ETFs, and I think that 25% is from public companies. So it's a huge chunk. Yeah.
Wow. And what about
I think public companies are more now.
Are they?
Yeah, I think I saw something yesterday that public companies bought more than ETFs in the previous month.
Wow.
Which is the first.
It's it's like a juggernaut. The speed at which this adoption has happened.
Yeah.
Just in the 3 weeks we've been going live, and it just feels like it's gaining such momentum.
It's game theory. And once people wake up, it is once they understand. And I think a lot of things are happening behind the scenes as well that they don't even talk about. I think a lot of governments might be even stacking and keeping it quiet. I don't think everyone's going to be telling you what their strategy is.
I think the governments are mining.
I think
or they're
our
buying.
government's mining.
I doubt.
Do you really?
I do.
Really?
Yeah.
I
What's the
can't believe
basis
for a
for this?
minute
No,
we've got anyone
there is
competent
no
enough to do
basis.
that.
Oh, there is no basis.
There's no basis other than I actually spoke to somebody who said his wife worked at Number 10, and they have a very different view of Bitcoin, and I don't know, he gave me some noises that maybe it might be happening, and they're just keeping it very, very quiet.
I'll be absolutely amazed if that's
Me
the case.
too.
But there are countries, and I think if you're a country or you're a sovereign wealth fund, one of the stigmas you've always got is the criminality of Bitcoin's past.
Yeah.
So what you can't afford is to own a Bitcoin in a country's wallet, for instance, that's been blacklisted or been touched by a wallet that's been blacklisted. So what they seem to do is buy fresh, or it's called virgin coin, because it's straight from a miner, but they can verify it's never been anywhere that's ever been anywhere near any criminal activity. So that's the only way a country or a sovereign wealth fund probably would be able to or want to hold Bitcoin. So I think they're paying a premium to miners to buy that Bitcoin fresh from the miners.
Interesting.
And
And
do you
not
know-
actually doing the mining themselves?
Some will,
Yeah.
but some, if you've got excess energy, you will. So there's a very wealthy country in the Middle East that has their own nuclear mining business.
Whoa,
And
what
any
country is this?
nuclear mining business, Abu Dhabi,
Okay.
any excess nuclear energy, they mine Bitcoin with it.
Yeah.
So that's like cheat
Yeah.
code.
Yeah.
But they're really, really going for it. So I think if you've got excess energy, and we've got a lot of excess wind energy, which Susie's expert on, I don't know.
Expert, but thank you, Peter.
I don't know why we wouldn't mine Bitcoin with that.
Yeah.
So why would you pay to not use your energy?
Yeah,
Like,
exactly.
It's insane.
Yeah.
The hash rate dropped when they bombed Iran by 15%.
No, I can imagine.
I think there's a lot going on, and although it is laughable that the UK government, because we're so far behind and our hash rate is so woefully low, I don't think we can completely discount it.
I think you'd have to do it via excess renewable energy, though, because of the cost of electricity in this
That would make
country.
the most sense. This guy thought it was from the grid.
Yeah, well, you'd lose money if you mined from electricity in this country. You'd lose money.
Not
It's
if
just
you
too
were paying
expensive.
different prices.
Well, that's what you'd have to do. You'd have to pay a different price, or it would have to be renewable,
Yep.
and you get
Yeah.
it for nothing.
100%.
Yeah, I was telling Susie that I have a house with solar panels on the roof, and the house makes more power than it uses. So
Yeah.
I was like, all right,
Perfect.
maybe I need some mining machines in the
Yeah.
garage.
You do.
Absolutely.
All right, we're going to move on because time is flying by. We're going to just go straight to the global gist, if that's okay. Anton, producer up above, can we do that? Excellent. This is our segment where we break down the headlines driving the world of finance, tech, and digital assets. It's the global gist. A UK pension firm says interest in Bitcoin is growing, especially after helping one of its clients earn a 60% return in less than a year. Cartwright Pension Trust helped a British pension scheme invest just 3% of its portfolio into Bitcoin back in November 2024. That small move paid off in a big way. According to Cartwright, the fund saw strong returns as the cryptocurrency surged. The company says this early success has sparked more conversations with other clients, and now Cartwright has launched its first annual Bitcoin review, a report aimed at educating pension funds and other institutions about the role of Bitcoin could play in long-term investing. Arash Nasri, a senior investment consultant at Cartwright, said the reaction from the wider pension industry has been surprisingly positive, but he admits there's still some hesitation. Many in the industry worry about Bitcoin's price swings and whether it's too volatile for pension funds. Nasri pushes back on that idea. He says understanding risk is part of building a strong investment portfolio, and he believes it's time the industry starts learning more about how Bitcoin actually works. He's also made it clear that Cartwright isn't selling Bitcoin and doesn't profit from these investments. As independent advisors, their goal is to help clients think about the bigger picture and how new technology like Bitcoin can affect everything from savings to company balance sheets. Cartwright says the interest isn't just coming from pensions. Charities and corporations are also looking into how Bitcoin could be used for international payments or as a reserve asset. But Nasri was quick to note that Bitcoin isn't for everyone. He says it's not ideal for short-term investing, but many long-term investors, especially in pensions and charities, should be having serious conversations about it now. For those willing to learn, Cartwright believes Bitcoin could be a meaningful part of the future. What are your takes on that?
I think it's really important for giving it credibility. I think it's definitely a start, and the returns speak themselves. I said best performing asset of the decade. Why wouldn't you? The 60-40 portfolio is dead. We know this, don't we? So, you know, they're going to have to start waking up to it, and we need to start pushing back against these outdated narratives, because what they're actually advising people to do is outdated, it's wrong. And when they talk about volatility, we know that the volatility in Bitcoin is reducing. It's no more volatile than a tech stock. In fact, a lot of tech stocks are probably more volatile. So I say this is great, hugely helpful.
Does this type of story help your cause?
Yes.
Is this something that you would take to government as an example to say, you know, look, these people are doing this is working, let other people do it?
I mean, you have to prove that it makes business sense. You have to prove that it's becoming a bit more mainstream. We are fighting the FUD from the mainstream media. You know, they do still think it boils the oceans and that it's a Ponzi scheme used for criminals. You mentioned that earlier. Like, we have to fight against these narratives. And when a credible company like Cartwright say that they're advising pension funds and 3% and the returns speak for themselves, then of course, it's really good for the cause.
You got to think about what's the role of these people that are advising, right? So if you're a financial advisor or you're a trustee of a charity or you're a trustee of a pension scheme, you've got a legal obligation to do what's in the best interest of the investors. Yeah. So you would worry about getting sued, right? So you wouldn't usually do anything out of the ordinary because you could get sued. But what's now becoming the case is, well, if you're my trustee and you didn't consider Bitcoin, is that now a risk that I'm going to sue you for not considering it? So that's the problem. So as a trustee, you've got a legal obligation to do what's right for the investees or the beneficiaries. And so when Sam and Arash did the pension investment, it was an absolute no-brainer once they looked through the numbers, because they had a 10-year payout timeline. And if Bitcoin went to zero, they would have been, I think, 3 months delayed in their payout. And if Bitcoin went how they thought it would go, they'd pay out 2 years early. And so that was a no-brainer.
Yeah.
So it depends on the particular scheme as well, because if you've got a short-dated environment, well, that's probably not that particularly friendly for a Bitcoin investment.
Which they say,
If you've got a long-term environment, then you know it's criminal to not consider it. And if you look at the 200-week moving average, it only goes up.
Right.
So over a 4-year period, no one loses money if you invest for 4 years plus.
Yeah.
So that's the sort of thing that trustees need to look at. And again, back to my point, if you are a trustee and you don't do what's in the best interest for your investors or beneficiaries, they could sue you.
Yeah.
So previously they'd be worried about getting sued for doing Bitcoin, but I think we're going to cross the chasm of you might get sued for not doing Bitcoin. And the guys at Cartwright are doing a phenomenal job to push that forward in a really professional way. Because if you look at Cartwright and you meet them, they're not crypto bros. They're really serious investment people that have now come to the realization that this is a really, really important thing for what you need to have as an allocation in your pension scheme if you want to carry on growing at a rate that's going to benefit the members and hence not get you sued.
Yeah, it's fantastic.
Yeah.
How closely is the work you do in alignment with Cartwright? Are they two very different businesses, or
similar, really? So they advise people what to do.
Right.
We offer products where people could actually go and execute it. So they don't
would
have a
advise your
Bitcoin
products,
fund.
potentially.
So they would invest. They would advise, say, a pension company that they should hold Bitcoin. What that company would then do is go through a process of how is it most appropriate for us to hold Bitcoin. If it's actually holding Bitcoin, that's great. If it's holding a Bitcoin fund, well, that would then be something we could then help with. So they're advising institutions, professional investors, pension funds to buy Bitcoin.
Got it.
What you then do to actually action that, we then offer the services of.
Makes sense.
So we're all singing from the same hymn sheet.
Yeah, fantastic. Okay, I'm gonna keep moving on. We've got 5 minutes left. These shows, they go so quickly.
Easy.
Okay. Next up, excuse me, I'll follow my place. Well, actually, why don't we?
Elon Musk
Let's just talk about Elon Musk. We've only got 5 minutes. What do you make of this potentially Elon Musk like to tweet that said he's secretly buying Bitcoin?
Yeah.
What do we think? Is this just like crazy hype? Is this?
No, well,
do we think it's a good thing that's happening?
It was inevitable, just like Bitcoin's inevitable. He had a lot of Bitcoin on his balance sheet. I think it was
He or
2021.
Tesla?
It still has.
Tesla.
They still, it's
But
made
they
them very
sold
well.
a lot
Yeah.
due to environmental concerns, and he said that he would buy it back.
I thought it was
when the
cash flow concerns. I thought they were having cash flow concerns.
I thought it was environmental
Okay.
concerns.
He tweeted about environmental concerns, which tanked the price a lot. But don't know
you
if
think it was
Tesla
all to it?
sold.
No, they did. They sold about 3/4, I thought.
Did they? Well, they've
Yeah.
still got
Yeah.
quite a lot.
He has still got quite a lot.
Still
No,
a
he
billion's
has,
worth now.
But he sold a huge chunk of it at the time due to environmental
Yeah.
concerns, and he said that he would buy it back. He did say he would buy it
Yeah.
back when that changed. And if you look at the Bitcoin Mining Council, they now say that 60% of the network is run from renewable energy. So this is the time. Like, and he's really good at narratives. He's really good at timing things. He knows what he's doing. So I think this is a case of him just rebuying back what he shouldn't have sold back in, what was it, 2021?
Yeah, I think he's obviously been sold a story by the Trump administration about how they're going to balance the books in America, which isn't going to happen. So his point was they need to reduce the deficit by getting rid of fraud and waste, making money, which Howard Lutnick and Scott Besson are really going for. But if they're then going to just raise the debt ceiling and print more money and debase everybody else again,
Yeah.
well,
His
what's the
only
solution
option
to that?
is-
Yeah,
Yeah.
Bitcoin's the only solution to that. And I imagine during the election campaign, he was probably told what he can and can't talk about, and Bitcoin may have been one of those things.
You think he
And
was
so-
told that he can't talk about Bitcoin?
I think they probably wanted to keep the Bitcoin talk by the Bitcoin people, and so I think maybe because
Liability.
Elon knows, not a liability, but that's your lane.
Right.
We need you to
Excuse
stay in
me.
this lane, yeah, because that's going to get us the most votes.
Yeah.
We'll go and talk about Bitcoin and crypto over here with these people. But Elon probably, if you look at Elon Musk, you didn't want to use Elon Musk to get the Bitcoin vote. You wanted him to get the massive Twitter vote. And so that's where he's effective. He wouldn't have been as effective here if he was over trying to get the Bitcoin vote.
So you
So that's
mentioned-
probably where he was targeted.
You mentioned the debt ceiling. This is something that's really confused me about the Big Beautiful Bill. How they want to increase it, by 4 trillion?
4 trillion.
Likely will, yeah.
No, but it's been suspended. So I don't understand how that works.
Sorry, what's been suspended?
The
bill?
debt ceiling has been suspended. So they want to increase the debt ceiling by 4 trillion, but from
But what do you mean it's been... Like
there
if-
is no
if-
ceiling at the moment. They don't need to extend it because there's no top
Well,
to it.
my understanding is that it happens because you've got the country needs to take on more debt because it can't cover its expenses.
And that's why they got rid of the actual cap of the debt ceiling. There is currently no top to the debt ceiling. So I don't
So wait,
see,
you think it's going to be more than 4 trillion? Is that what you're saying?
I don't see that it's a non-discussion because
It will add to the bill will add to the debt ceiling because the cuts that the tax cuts that he's made will not cover the money that the country spends. So it will increase. That's going to happen.
right, okay, so it's a case of the fact that it's just going to increase it by 4 trillion, not that they're extending the ceiling by 4 trillion.
I think there's discussions on both. I think they're going to use 4 trillion, but I don't think that's necessarily the new debt ceiling. I think there was talk of removing debt ceilings full stop,
Yeah.
but also at the same time increasing debt by 4 trillion.
How do you
Right,
remove
okay.
debt ceilings if your country's still in debt? The
So
ceiling
that's-
is
That's
the
why-
maximum amount of debt, right?
Because
Yeah.
we're in
Where
a
does-
debt spiral.
But where does it go?
it just goes up
Yeah, it goes up
forever.
until there's going to be some sort of systemic collapse,
Yeah.
because you'd end up devaluing everybody too much. And so if you look at other countries where their currency's been devalued like 99%, well, that's a huge problem for that currency. So that basically makes that currency null and void. You wouldn't ever use that or ever store that. So if the American dollar, which is the world's most used currency, if that starts to go into that death spiral, that's great for Bitcoin.
Yeah, everything.
But what I think they'll probably
Right.
do to secure it is use stablecoins and Bitcoin,
Yeah.
because all stablecoins that are pegged to the dollar would have to have the dollars.
Yep.
So that means there's an awful big market for dollars, even if it's just to hold as collateral for stablecoins.
85%, I think, of Tether is that when they buy it, 85% is backed by US debt.
Yeah. So that's US
85%.
dollars. So that's why they're going for the stablecoin bill, because
Yeah.
that stabilizes the dollar massively, because there's there's a huge buyer. So let's say they want to create 4 trillion. Well, where can we go and send that to? Stablecoins is a great place.
Yeah.
It keeps
Hence
the
them
US
trying to pass the legislation.
Yeah. I mean, it's good for America. It buys them some time. It's not good for the rest of the world. It will just it's another way of keeping the US hegemony.
Wow. Well, that brings us to time. Quickly, would you mind sharing where people can follow you? I don't think we've done that with you yet, Susie. Where can people follow you online and learn more about you?
The easiest place is just Twitter or X now, Decentrasus.
Central Suze, and you, Peter?
Yeah, you can follow the Jacoby page or Peter Lane 1985.
Love it. Fellow 1985.
40 this year.
Oh, me too.
We'll have a joint party.
Yeah.
The Bitcoin party.
I just
Love
turned
it.
45. I feel really old.
Oh,
That's not
come
cool.
on.
You look younger than us. Well, me anyway.
Thank you so much for watching. We'll be back tomorrow at 1 p.m. Just handing over now to our team in the US. Check out The Great Awakening with Nolan. See you soon.